Welcome back, everybody. For Class 3's video lecture, I will be going over torts or tort law. So I'll be going over what is a tort, what are different types of torts, and then we'll look at the primary category of tort, which is negligence. We'll go into what the four elements of negligence entail. We'll look at different types of negligence. Then we'll go into intentional torts, another big category of tort law, and specifically fraud. And then we'll cover privileged communication and confidentiality and the working papers rule. So what is a tort? In layman's terms, a tort is a private wrong resulting from the breach of a legal duty imposed by society. The duty is not created by contract or other private relationships. Put another way, I would describe torts as the area of law in which a private individual can sue another private individual. This is distinguished from criminal law, which is when the government sues a private individual for violation of a law or statute that defines criminal behavior. So criminal law would be when you steal something or you assault somebody and the government essentially charges you with a crime of theft or the crime of assault, and you have to answer to the government in terms of proving or disproving whether or not you committed that crime. Torts is the same way, except that the person that's suing you is not the government, but another private individual. This is important to distinguish because civil suits or torts extend out from criminality in many cases. So assume that you stole something from a business. The government can charge you with theft as a crime. If you're found guilty of theft in the criminal court, then the person that you stole the money from could sue you in civil court and pretty much attempt to prove the tort of conversion, which then allows them to get damages. Without tort law, then whenever a private individual harms another private individual, the government would be the only entity that is able to essentially right that wrong and then put you in jail or fine you. But that only serves the ends of the government. And what happens to the person where you stole their money, right? Is tort law, it gives private individuals an avenue to be recompensated for losses that were incurred upon them by your actions. So here you see the different types of torts that we'll be going over. The first category is negligence, which is defined as a failure to behave with the level of care that someone of ordinary prudence would have exercised under the same circumstances. This is a very large portion of tort law, and it's the most common type of lawsuit that a private individual can charge against another private individual. There's a higher level version of this, which is the intentional torts. Those are a type of tort that can only result from an intentional act of the defendant. So the distinction between negligence and intentional torts is one of intent, where negligence only requires that the defendant not have conducted themselves in a way that someone else in the similar circumstances would have conducted themselves, whereas intentional torts requires the proof in court that the defendant acted intentionally. The last category of strict liability in tort is just a separate category of tort in which the defendant is liable for committing an action regardless of the intent of his or her mental state when committing the action. So, an example of strict liability in tort would be if an actual statute was violated, and it doesn't really matter what the mental state of the defendant was, as long as they committed an action, that they're liable for that action. So, for negligence, there's four primary elements. In order for a plaintiff to prevail in a suit against a defendant on the basis of negligence, they have to prove these four elements. So, this would be duty, breach, actual and proximate causation, and damages. And we'll go into these in more detail. So, just keep these on hand and refer back to them as we continue forward. So the first element is duty. So the plaintiff, in order to prevail against the defendant on the basis of negligence, must prove that the defendant owed the plaintiff a duty. So how is duty defined? In the context of financial professionals, a professional owes a duty to act with the knowledge and skill as an average member of that profession practicing in a similar community. So, likewise, a professional who holds him or herself out as a specialist in a particular learning or field is held to the standard of care and skill of an average member of the profession that practices that specialty. So, this is the duty element we refer to as the standard of care. So, whenever a CPA is conducting financial services on behalf of a client, then the CPA is bound by a duty to act with reasonable care. So, this duty is baked into every CPA to client relationship in that regard. So, the second element is breach of this duty. So, the plaintiff has to prove that the defendant or the CPA in this case, didn't fulfill their duty to act as an average member of their profession. So examples of breach would be if the CPA fails to communicate to the client about findings or circumstances that indicate misstatements in the accounting record. Fraud is another breach. Failure to communicate the significant deficiencies and or material weaknesses are also examples of breach of duty. For the third element, we look at causation, specifically actual causation and proximate causation. So the plaintiff in a negligence suit would have to prove that the CPA's breach of their duty actually and proximately caused harm to the plaintiff. So actual cause is relatively easy to understand. It simply refers to a cause in fact, and it means that if the breach had not occurred on the part of the defendant, then the plaintiff's harm would not have occurred. So in order to see if there is a actual cause or cause in fact, a lot of legal scholars, judges, and attorneys, we will employ the but-for test. So we'll simply put the words but for in front of the conduct that is in question to be the breach and in question to be the actual cause. And we'll see, had the breach not occurred, would the harm have occurred? So we say, so an example would be, but for the accountant's failure to report the correct records of a tax, then the plaintiff would not have suffered a tax liability harm. That would be a very quick surface level example of actual cause. So proximate cause or legal cause looks more at societal understandings of what a purported breach on behalf of the defendant entails. So the legal court would, in order to determine proximate cause, would look to see if the plaintiff's harm was a foreseeable result of the breach, where the chain of causation is not interrupted by a new independent cause. So what this simply refers to is that whatever harm the plaintiff suffered and is suing the CPA for, that harm had to be foreseeable as a result of the CPA's conduct, which also needs to be a breach of their duty or standard of care. And I'll give you an example in the next slide, because proximate cause has always been one of the sticking points in law school, where it's a little bit hard to understand on the surface of it, but relatively simple and straightforward once it clicks. So here's an example. So imagine a CPA is hired by a business to conduct an audit of the business's inventory. The CPA fails to discover during the audit that several expensive watches are missing from the business's inventory. Subsequently, an employee is caught stealing some watches. He confesses to stealing several before the audit and more after the audit when he found out he did not get caught. Only 5 of the watches can be recovered from the employee, who is unable to pay for those stolen. The CPA may be liable for those losses sustained after the audit if discovery could have prevented them. However, the CPA normally would not be liable for the watches taken before the audit when the loss is not the proximate result of the negligent audit. So, taking this example, let's run through the 4 elements that I just covered. So, duty. In this example, the CPA owed a duty to the business to conduct the audit with the knowledge and skill of an average CPA working in business audits. Second element, breach. The CPA breached the duty to the business by failing to discover the missing watches during the audit. Third element, causation. Is there actual cause? There is, because but for the CPA's failure to discover the missing watches, the business would not have incurred additional losses. Proximate. It is foreseeable that the CPA's failure to discover the missing watches would result in additional theft of watches. 4. Damages. Yes, the business did suffer financial loss from the watches stolen after the audit. Therefore, the CPA is liable for losses sustained after the audit if discovery could have prevented them. So in this case, then the business would be able to launch a negligence suit against the CPA because the CPA owed the business a duty to conduct the audit correctly as an average CPA would. They did not do so, therefore they breached that duty. The CPA's breaching of the duty, in this case conducting the audit in a bad manner, actually caused more watches to be stolen, and then it's foreseeable that the CPA's failure to conduct the audit correctly would result in more watches being stolen. So then proximate cause is satisfied, and of course damages is satisfied here because once the watches are stolen from the business incurs financial loss. So hopefully this is helpful to understanding negligence.